ever just stare at a nonprofit's like financial report and feel like, huh,
Yeah.
like it's written in a completely different language.
I know exactly what you mean.
Like you're missing a key
Yeah.
to unlock it.
Right.
Especially if you're in charge of making sure that like every dollar is going towards the mission.
Yeah. Especially
If you felt that way, you're in the right place.
You're definitely in the right place because that feeling is incredibly common.
Yeah.
There's this real push in the nonprofit world to be very effective and also to be crystal clear
Yeah.
about how you're managing your resources
Yeah.
that are entrusted to you.
Makes sense.
And that's really where this solid grasp of the financial fundamentals comes in.
That's what we're talking about today.
That's right.
In this deep dive,
Yes.
we're using this really great guide, Nonprofit Bookkeeping and Accounting for Dummies.
It's a good one.
And we're pulling out all the really like crucial
Yes.
insights.
Exactly.
The stuff you need to really feel confident about the financial health of your organization.
So we're not going to do like a boring textbook recitation.
Yeah, this is not that.
No. Think of this as your like fast track to feeling comfortable with nonprofit finances.
Okay, so whether you're leading an organization that's already established or you're just starting out or you're just kind of like curious about this whole side of the world.
Absolutely.
We're going to like break it all down for you.
Break it down to the essentials.
Okay, so our goal in this deep dive is very straightforward.
Yes.
It's to equip you with a clear understanding of all the core principles, practices, and compliance requirements for managing the finances of a nonprofit organization.
It's a lot, but we're going to break it down.
Yeah, and we want you to finish this conversation feeling ready to just go out there and do it. So let's just get right into it.
Let's do it.
Why is having a good handle on bookkeeping and accounting so important
Okay.
for a nonprofit?
That's a great place to start.
Yeah.
So, in today's world, nonprofits face these increasing calls for transparency financially.
Yeah, that makes sense.
The people who are donating their money and the foundations and government agencies that provide grants, they want to see evidence that their money's making a difference.
Yeah, of course.
And that it's being managed well.
Absolutely.
So as the source points out, good intentions aren't enough.
Right.
Like you have to prove that you're making an impact.
Yeah, you got to show me the receipts.
You got to show the receipts, exactly.
So it's all about trust.
It is all about trust.
Okay.
And building that trust.
Yeah, and building that trust.
Yeah.
So making sure that your records are accurate really reflects all your activities.
That's the bottom line.
Okay, let's talk about these two terms,
Okay.
bookkeeping and accounting. What is the difference?
So bookkeeping.
Yeah.
Think of bookkeeping as the day-to-day recording of your transactions for your nonprofit.
Okay.
So it's creating that detailed history, that paper trail of every dollar in and out.
Got it.
Now, accounting.
Yeah.
Accounting uses that information and then summarizes it and analyzes it to produce those reports that you need to make good decisions about the financial health of your organization.
So bookkeeping is the detail.
Yes.
And then accounting is like the big picture.
Exactly. It's making sense of it all.
Yeah, got it. Okay.
Yeah.
Now, the guide mentions something called double entry accounting.
Yes.
What is that?
It sounds complicated.
It does sound a little complicated.
But it's not.
Okay.
The main thing is balance.
Okay.
Double entry accounting means that every transaction affects at least two accounts. So, for example, if your organization gets a cash donation, your cash account goes up, and then your revenue account would also go up.
I see.
So for every transaction, there's a corresponding and opposite effect.
Okay, so it's kind of like a balancing act.
It is a balancing act.
Okay, so then what are debits and credits?
So debits and credits are how we track those increases and decreases in the system.
Yeah.
They're the mechanics of how the equation stays in balance.
So every debit
Yes.
needs a credit.
Exactly.
Okay.
And that keeps your books balanced and accurate.
Okay, so that makes sense. It's like the principle underneath that keeps it all in check.
Right.
Now, what about GAAP?
GAAP.
What is that?
Okay, so GAAP stands for Generally Accepted Accounting Principles.
Okay.
And it's this set of rules and guidelines that accountants in the U.S. follow when they're preparing financial statements.
Okay.
Think of it as a common language.
Right.
That creates this consistent framework.
So that everyone can understand the information the same way.
Yeah.
Got it. Okay.
Great.
So that leads us to the next topic.
Okay.
Which is How does a nonprofit decide which accounting method they should use? Yeah. So the guide mentions two.
Yes, there are two main ones.
Cash basis, accrual basis.
Okay, what is the difference?
So the cash basis is pretty simple.
Okay.
You record your income when you get the cash, and you record expenses when you pay the cash.
Okay.
It's simple.
Okay.
And it's often used for the day-to-day bookkeeping. Okay. Especially by small organizations.
Okay, and what about accrual?
Accrual basis.
Yeah.
Accrual basis gives you a more complete picture.
Okay.
It's generally required by JAP.
Okay.
For your formal financial statements.
Okay.
So basically you recognize revenues when they're earned.
Okay.
Regardless of when the cash comes in.
And you recognize expenses when they're incurred.
Yeah.
Even if you haven't paid the cash yet.
Isaac, can you give us an example?
Yeah, sure.
So I can understand.
So let's say you get a grant agreement in December.
Okay.
That promises you funds in January.
Okay.
If you're using cash basis.
Yeah.
You wouldn't record that income until January.
Okay.
When you get the money.
I see.
But accrual basis says you earn the right to those funds in December.
Yeah.
So you would record the revenue then.
I see.
Same with like a utility bill.
Okay.
You get the bill in December.
Yeah.
But you don't pay it until January. Accrual says you would record the expense in December.
Okay.
Because that's when you use the utilities.
Okay.
Cash basis, you'd record it in January.
Okay.
When you actually paid.
Okay, so accrual is more about when it happened.
It's more about when you actually earned it or incurred it.
Okay.
But even if you use cash basis for your internal tracking, your formal financial statements should be accrual.
Okay.
Because that gives a more true and fair view.
Okay, that makes the difference really clear.
Good.
Okay, so now let's talk about the more practical side of things.
Okay.
Like keeping good records.
Yes, very important.
So what are the essentials here?
Well, the guide really stresses that you need a good paper trail.
Okay.
Or digital trail, of course.
Yeah. These days.
Yeah, for every transaction.
Yeah.
This documentation is important.
Yeah.
Not just for internal management.
Yeah.
But for audits, too. And showing accountability to donors.
Right.
So you have to be able to support every entry with a document.
Okay.
So like a receipt for an expense.
Yeah.
An invoice for a service.
Yeah.
Donation acknowledgement.
Okay.
Grant agreement.
So every entry needs proof.
Every entry needs proof.
Got it. What about something like a checkbook register?
A checkbook register.
Yeah.
Still important.
Really?
Yeah.
Okay.
So whether it's a physical ledger or a spreadsheet, it's a fundamental tool for tracking your cash flow, inflows and outflows. Primarily your donations coming in.
Okay.
So the guide highlights that you should regularly compare your register to your bank statements.
Okay.
And this reconciliation process helps you identify any discrepancies, any errors, and any bank charges.
Yeah, what kind of bank charges are we talking?
So like credit card processing fees for online donations, transaction fees for debit cards, NSF fees.
Yeah, all that stuff.
Yeah, all that stuff.
It can really add up.
It can really add up.
Yeah. Okay. So the guide also mentions budgeting.
Very important.
Okay, why is that so important?
So your budget is your financial blueprint.
Okay.
It outlines your anticipated revenue and planned expenditures over a specific period.
Okay.
Usually a year.
Okay.
And a well-thought-out budget
Yeah.
is essential for managing your cash flow.
Right.
Making sure you have enough money when you need it.
Yeah.
Prioritizing spending and avoiding instability.
Okay, so it's not just about looking back. It's about looking ahead.
It's about planning.
Yeah.
Yeah.
Okay, so the guide also says that you should have an overall budget and also program-specific budgets.
Program-specific?
Yeah. Why is that?
So breaking down your budget by program really lets you see the true cost of delivering your services and where the money is coming from for those specific activities.
Right.
And that's super valuable when you're trying to show your funders how efficient you are and the impact of the program.
So you can see the big picture?
Yeah.
And then you can also see the little pieces.
Yeah, the details.
Yeah. Okay, now another term I wanted to ask you about is chart of accounts.
Chart of accounts.
What is that?
Okay, so the chart of accounts is like the structure of your financial record keeping.
Okay.
It's a list of all the different accounts
that
your organization uses to track its activities.
Okay.
So like your assets, liabilities, net assets, revenues, and expenses.
So what you have, what you owe.
Yeah, what you're worth.
Okay, and where the money comes and goes.
Exactly.
Okay, and then each of those accounts has a code.
Often has a code, yes.
What is the purpose of that?
So assigning those codes creates a system to classify and track your data.
Okay.
Makes it much easier to generate reports.
Right.
Analyze your spending patterns.
Okay.
And make sure your information is organized.
Got it.
And a good chart of accounts is a lifesaver.
Yeah.
When you're audited.
Okay. So it's all about organization.
It is.
In the financial realm.
Yeah.
Okay, so let's move on to the key financial statements.
All right.
The guide highlights 3.
It does.
The statement of activities.
Yeah.
The statement of financial position. The cash flow statement.
Right.
Okay, let's start with the statement of activities.
All right, so the statement of activities, sometimes called the income statement.
Okay.
Or the profit and loss statement.
Okay.
In the for-profit world.
Right.
Summarizes your financial performance.
Okay.
Over a specific period.
Okay.
Like a month, a quarter, a year.
Yeah.
And it shows all your revenue, donations, grants, other income, and all your expenses.
Okay.
And the bottom line shows whether you have a surplus or deficit.
So it's a record of the money in and out and the outcome for that period. Okay, what about the statement of financial position?
Okay, so the statement of financial position or the balance sheet gives you a snapshot of your organization's finances at a specific moment. So it shows what you own. Your assets, what you owe, your liabilities, and the difference, which is your net assets or equity.
And that shows the organization's health.
Exactly. It's a key indicator of the health.
And whether it can meet its obligations.
That's
okay, so it's like a financial photograph.
It is like a snapshot.
Yeah, at a moment in time. Okay, so then what about the terms current and long-term assets and liabilities?
Okay, so current assets are things that you can convert to cash within a year.
Okay.
So like cash on hand, short-term investments, accounts receivable, things like that.
Got it.
Long-term assets aren't expected to be converted within a year.
Okay.
Like property, buildings, equipment.
Got it.
Current liabilities are obligations that are due within a year.
Okay.
Like accounts payable.
Yeah.
And long-term liabilities are debts that go beyond a year.
Okay.
Like a mortgage or loan.
Right.
And then the fundamental equation of the balance sheet is that assets equal liabilities plus net assets.
Okay, so that ties it all together.
It does.
What about the cash flow statement?
The cash flow statement focuses on the movement of cash, where it came from, where it went during a specific period.
Yeah.
And it's different from the statement of activities. Yeah. Because that statement can include non-cash items.
Okay.
Like depreciation.
Okay.
So the cash flow statement categorizes cash flows into 3 main activities.
Okay.
Operating, investing, and financing.
Okay.
So operating relates to your core work.
Okay.
Investing is like buying or selling assets.
Okay.
And financing is borrowing or repaying debt or certain contributions.
Okay.
And this statement is crucial for understanding your liquidity.
Okay.
Your ability to meet your short-term obligations.
So it's not just about having a surplus. It's about having the cash.
It's about the cash.
When you need it.
When you need it.
Yeah. Okay. Now let's talk about how nonprofits actually get money.
All right.
Donations.
Donations are
huge.
They're a primary source.
What are the different forms?
So they can come from individuals, corporations, foundations, government entities at all levels.
Okay.
And it's not always cash.
Right.
You can have grants, in-kind donations.
Okay.
Like volunteer time.
Yeah.
Or expertise. Yeah. Or goods and services.
Like a local business giving you office supplies.
Exactly. Or a marketing agency doing some pro bono work.
Yeah.
And the guide also points out federal grants as a major funding source.
Yeah, for sure.
Yeah.
Okay. Can you give us an overview of the process?
Yeah. So securing a federal grant is a process.
Yeah.
It's structured.
Okay.
Usually the first step is to register your organization on grants.gov.
Go. The federal grants portal.
The federal grants portal.
Got it.
Then you search for opportunities that fit your mission.
Yeah.
You download the application instructions and forms and submit it electronically.
Okay, so it's all online.
It's all online these days.
Okay, and how long does that process take?
It can take a while, often several months for review.
Okay.
And then a crucial aspect is documentation of how you spent the money.
Yeah.
And you have to adhere to all the terms and conditions of the grant agreement.
So that's really important.
If you don't comply, there can be serious consequences.
Okay, like what?
Financial penalties.
Oh, wow.
You could be barred from getting future funding.
Wow.
And then another concept is matching funds.
What is that?
So sometimes the grant will require the nonprofit to contribute a percentage of the project cost.
From their own money?
From their own resources.
Wow.
Yeah.
Okay, so compliance is really important.
Compliance is essential.
With federal funding?
Yes.
But what about compliance just in general?
So for nonprofits in general, compliance involves several things.
Okay.
One is filing the IRS Form 990.
Okay. The 990.
The 990.
What is that?
It's an information return
that
tax-exempt organizations file every year.
Okay.
It's not an income tax return.
Okay.
And there's a simpler version.
Okay.
The 990N for smaller organizations.
Okay.
Our guide also mentions FASB statement. No, 116.
What is that?
This provides standards for how nonprofits record and report contributions that they receive and make.
Yeah.
So you got to recognize them at fair market value and distinguish between unconditional and conditional promises to give.
Okay. And what about conflicts of interest?
So nonprofits have to be very careful about identifying and managing conflicts of interest.
So, like, what are we talking about here?
So like a board member who benefits financially from a vendor that your nonprofit uses.
I see.
Or using the organization's assets for personal gain.
Okay, no. That's bad.
That's bad.
Okay.
And then there are rules around lobbying and political activity. Nonprofits can't support or oppose political candidates in a big way.
Okay.
And then there's something called unrelated business income.
Okay.
So this is income from activities that aren't related to your tax-exempt purpose.
Okay.
You can't have too much of that.
Okay.
Or you could jeopardize your status.
Got it.
Yeah.
Okay, now what about audits?
Audits.
Why are they important?
So audits are an independent examination of your finances and compliance with laws and regulations.
Okay, so there are different types.
There are different types.
Okay.
You got financial audits, which focus on your statements.
Yeah.
And then you have grant audits.
Okay.
Which look at how grant money was used.
Okay.
And they can be done by external CPAs.
Certified public accountants.
Yes.
Okay.
Or internal people.
I see.
And for nonprofits, with lots of federal funding, there might be specific grant audit requirements.
Okay.
Guided by the Yellow Book standards.
Okay, so it's all about verifying.
It is about verifying.
The accuracy and being accountable.
And being accountable.
Okay, so what are the benefits then?
Well, besides compliance, a good audit gives you credibility
with donors.
With donors and grant makers.
Yeah.
It shows you're managing things well and transparently.
Okay.
And audits can also help you find weaknesses in your financial controls. And processes.
So you can improve.
So you can improve.
And avoid problems.
Exactly.
Okay, so it's like a financial checkup.
It is.
That helps you get better.
Yeah.
Okay, now let's talk about payroll.
Payroll.
What are the responsibilities there?
So as an employer, you have to make sure your employees are paid fairly and accurately.
Right.
And that all the taxes are withheld and submitted on time.
Okay.
So that's federal income tax, Social Security, Medicare, state and local.
All of it.
All of it.
Okay.
This is important.
Yeah.
If you mess this up, there can be big penalties.
Okay.
Yeah.
Okay, so what are some of the forms and processes?
Okay, so some key forms. The W-4 for employee withholding.
Okay.
The 941 the employer's quarterly federal tax return.
Okay.
And the 8109. Or its electronic equivalent. For tax deposits.
So you need to know all those forms.
You do.
And you also need to know the difference between an employee and a contractor.
Because you handle the taxes differently.
Okay, so that's really important.
It is.
Okay, so as we wrap up, what are some key principles for staying organized?
So the guide talks about the consistency principle.
What's that?
So once you pick an accounting method, you stick with it.
Okay.
So that your statements are comparable over time.
Makes sense.
Then there are the notes.
To the financial statements?
To the financial statements.
Yeah, what are those for?
They give context
Okay.
and explanations
about
your accounting policies, any liabilities, and restrictions on your asset.
Okay.
And finally, understand the year-end closing process.
Okay, so that's like...
It includes adjusting and closing entries.
Okay.
So you can prepare accurate statements.
Okay, so consistency... Yes.
Transparency and a good year-end process.
Are key.
Are keys. Okay, so as we finish up this deep dive, what are some of the most important takeaways?
All right, so if I had to pick a few,